Hello, investors and future investors. Welcome back to the channel. For today's video, I'm going to be showcasing an extremely exciting option strategy. Now, this option strategy works particularly well if you're trading with a small account. Now, if you're new to options and you want to go with options full time, or you're just trying to use options in order to supplement your 9 to 5, I got good news. You actually stumbled onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. So as you can see here, the SPDR ETF is a bit down today, but this does not concern us because the option strategies we focus on this station guarantees that you make money whether the stock market is going up or the stock market is going down. That being said, the option strategy for today is going to be a 4-leg option strategy. Now, I did make 2 videos prior to this one. You're going to need to relate to those videos before, especially if you're new to options trading. Those 2 videos are going to be put credit spreads and also call credit spreads. Now we're going to go ahead and do what we love doing on this channel, which is going to be getting down and dirty with options. Now, when we say we're going to get down and dirty with options, mean we're going to do the exact option strategy. We're going to walk you through the process in order for you to learn along and adapt these strategies. Do not focus on the monetary value, always focus on the strategies. Once you learn the strategies, that's going to allow you to do like what we do, which is continue to make consistent income. So let's go ahead and get down and dirty with options. So for today's video, since we already have the SPDR ETF up here, why not use it? But there's another reason for this. I will tell you as the video goes on. Now you gotta stay to the end of this video and you gotta concentrate. I'm gonna also show you how to reduce your risk. So let's go ahead. We're gonna go to trades by options to the bottom, and that's gonna open up our option chain. So now that we have the option chain open, our first part of this 4-leg option strategy, we're gonna go ahead with sell, and we're gonna go ahead with call. Now we're going to adjust our strike date. We're going to adjust our strike date to January 10th. Good. So sell, call, strike date. Remember, strategy, strategy, strategy. So now we're going to go ahead and we're going to choose our strike price above the current share price. And I will be going with a very high percentage chance of winning this trade. The reason for that is that I think overall the market goes up. So I'm extremely bullish on the market. So I will be going with the 604 strike price right here. As you can see, the top, it says strike price. Now, the reason I'm going with the 604 strike price is that my chance of profitability is in the 90 percentile, which is extremely high. Now, with the 92% chance of me winning this trade or this trade going in my favor, I would get the strike price of 604. In addition to that, because I'm selling something, I'm going to get compensated. That compensation is going to be 0.26. Now, 0.26 translated into the real world is going to be $26. Each option contract is multiplied by 100 shares. So 0.26 multiplied by 100, you're going to get $26. This is the end of our first leg of this 4-leg option strategy. This initial strategy is known as a covered call option strategy. The covered call option strategy is a win-win option strategy, and we showcase this option strategy on the channel a lot because it keeps winning. Now we're going to go ahead and we're going to do the second leg in the first half of this option strategy. And to do that, we're going to go ahead now, we're going to switch over to buy. We're going to stick with call, and we're going to stick with the exact same strike date. Remember, the strike date has to be the same. Now we're going to go ahead and choose our secondary strike price. And for that, I'm going to be going with a 605. With the 605, we now buying a call. And when you buy something, you have to pay. So the payment we're going to be making is going to be 0.20 or $20. So let's go ahead. We're going to click into that. Now, what this does is that it creates an entirely different option strategy. So this new option strategy it created is going to be the call credit spread. Now, on this channel, we focus on option strategies that make us consistent income. Now, for the first half of this strategy, which is going to be your 2 calls, your sell call and your buy call, the credit you're going to be receiving is 0.07. I did mention this in the start of the video. Do not focus too much on the monetary value. Focus on the strategies. The strategies is what's going to allow you to stay in the market long term and make consistent income, whether the market is going up or the market going down. So before we jump into the second half of this option strategy, if you guys are getting any value from this video, now would be the perfect opportunity for you to go ahead, like the video, subscribe to the channel, and most importantly, hit the notification bell. That's going to allow you to get an alert when I post this video. And for all those of you that subscribed within the last month, I truly, truly appreciate you more than you guys know. So let's go ahead and jump into the second half of this video, and we're going to do the first leg of the second half, which is also going to be the third leg of this 4-leg option strategy. Now for that, we're going to go ahead to sell, and we're going to go to put. Keep in mind, always pay attention to your strike date. So we're going to be maintaining the exact same strike date of January 10th. Now for this option strategy, it's going to be the flip side. The reason why it's going to be the flip side is because we're going to go ahead and choose our strike price now below the current share price. So we're going to go below the current share price, and now we're going to look for a chance of profitability around the 80 percentile. So I'm going to go with the 81% chance. Now, the reason why I'm choosing the 81% chance as opposed to the top half where I did a 90% chance is because I'm extremely bullish on the stock market. And I think in the overall scheme of things, the stock market is going to continue to go up. So I don't need to go to a 90% chance if I do think the market is going to go up. Remember, use your own due diligence before investing in order for you to come up with your own personal preference and risk management. Now, with the 80% chance of profitability, I'm going to get the strike price of 586. So with the 586 strike price right here and the 81% chance of profitability, once again, we're going to be selling something. This time is a put. Now, because we're going to be selling a put, once again, we're going to be receiving a juicy premium. That premium is going to be 1.18. And as you can see, it's fluctuated only because the market is open as I make this video. So we're going to go ahead and we're going to click into this. And well, what do you know? Our total credit has gone up. Now, while the credit was 0.07, I did mention do not focus on the credit. And I'm going to say it again. Not because the credit gone up now to $134. Still do not focus on the credit. Focus on the strategy. So this is the third leg of the option strategy where we sell a put. Now we're going to go ahead and jump into the last or the fourth leg of this option strategy, and that's going to bring it all together. So for that, we're going to go now and we're going to go to buy. We're going to maintain our put side of things. And once again, strike date, strike date, strike date. So we're going to be maintain our January 10th strike date. So now we're going to be buying something, which is going to be a put. Now we're going to be expected to pay some kind of money. So once again, we're going to choose our strike price below the current share price, and I'm going to be going with the 585. The reason for going with 585 is the next one right below your 586. And I'm going to explain to you how these all work out. Stay with me. So the amount we're going to have to pay now is going to be $100, or well, look at that, 1.00. We're going to go ahead, we're going to click into this, and once I do that, everything is going to reveal itself. Let's go. Okay, so here we are. So this 4-leg option strategy is none other than the Iron Condor option strategy. Now, the Iron Condor option strategy is perfect for if you're trading with a small account. Let me show you why. Let's go ahead. We're going to hit continue. Now we're going to go ahead to review, and voila. One reason why the Iron Condor is perfect if you're trading with a small account is because you want to grow your account. If you want to grow your account, why not receive premium in order to grow your account quicker as opposed to just keep depositing money into your account? So with this option strategy, you're going to receive a premium in order to grow your small account. Now, another factor for you to do the Iron Condor is going to be you need to leave a collateral. In order for this strategy to go through, you will be required to leave a collateral. Your collateral in this case is going to be $100. Once again, another reason why this is good for a small account. The amount of collateral makes it good even if you're trading with a small account. Now, quite frankly, if you have a small account and you don't have $100 in there, you probably should not be trading options. So now, let me show you another reason why this option strategy is perfect for a small account. Then I'm going to go ahead and break down the strategy and how it's going to work out. So, like I said, do not focus on the monetary value, focus on your percentage gains. So let's round it off to $27. If you were to divide $27 by $100, that's going to give you a 27% return. That 27% return, if this trade goes in your favor, of course, is going to be representative of only 1 week. Just for analysis, the entire SPY usually gives a return of 10% on an annual basis. You're going to be getting about a 27%. Now, a 27% return is extremely high. So if you want to reduce your percentage of return in order for you to be a bit more risk tolerant, then one thing you could do is adjust your spreads right here. Now, I did mention at the start of the video, it's advisable for you to go ahead and look at the 2 previous videos I did. If you look at those videos, it's going to show you how to adjust your legs right here and how that's going to make the trade even higher chance of profitability and go in your favor. So this 4-leg option strategy is the Iron Condor. Now, how does the Iron Condor work out? So this is how it works out. Come expiration date of January 10th, in order for this trade to go in your favor, all that needs to happen is that the SPY needs to be trading between your 586 price right here, and on the top side, it needs to be trading between your 604 right here. Now, if that happens, you get to keep your option premium of the $27. That is yours to keep no matter how the trade goes. And then now your option collateral of $100 is released back to you in order for you to do whatever you want with it. So once that $100 is released back to you, then you could go ahead and keep doing this option strategy again and again until you get assigned. Now, the other way this option strategy could go, which I'm going to try my best not to make it complicated, is that if you were to adjust your width of your legs. So then if come expiration date, if SPY is trading at any price between your new width, then once again, you get to keep your $27 premium and you get back part of your collateral. So in that case, by making a slight adjustment, you do not lose the entirety of your collateral. Once again, perfect for if you're trading with a small account. Now, if you guys have any questions concerning the Iron Condor, please let me know in the comments below. Now, I want to thank you for getting this far into the video. Welcome to the new year, and go ahead, like the video, subscribe to the channel, but most importantly, if there's anyone out there that's trying to grow their small account, then feel free to share it with them. We're trying to help as many as we can, and until the next video, keep pushing your investments.